Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. In the video on the 10th of February, I cautioned that Bitcoin may be forming a double top. This bearish pattern was eventually completed on the 25th of February and Bitcoin has fallen quite sharply. The textbook target of this double top is at 70,526.3 and Bitcoin reached a low of 78,229.75, which is about 59% of its textbook target. I still think Bitcoin is bearish, but the next move I believe is likely to be up. Now, there are three reasons for this. Number one, we can see over here price action has overextended below the lower Bollinger, which usually leads to some form of a rebound, corrective rebound. Number two, you can see that on the 28th of February, Bitcoin formed a sharp downside exhaustion candle, which also tells us that in the near term, there should be some form of a rebound in Bitcoin. Number three, I have described to you the three phases of chart patterns. Number one is the completion phase. So the next phase is likely to be the correction phase, during which price action goes against the intended trend. After the correction phase will be the resumption phase, during which price action resumes the intended trend, which is bearish. So all in all, I think Bitcoin is still bearish, but the next move is going to be likely to be an upward move as a form of correction. I first highlighted the possibility of Microsoft forming a head and shoulders top back in August 2024. Now, Microsoft over here is nearing completion of this bearish pattern. A weekly close below the neckline at 388.06 will complete this bearish pattern, and it has a textbook target at 308.92. Now there are supports at 350.64 as well as 365.8. Both will attempt to bounce Microsoft higher when tested. Qualcomm is also risking the completion of a head and shoulders top, and I highlighted the possibility of this during December last year. Price action has bounced off the neckline over here in middle of December, but the upside was eventually rejected back below the Ichimoku cloud, which is now in bearish territory. Last week's close below the cloud as well as this week's close below the 20-week simple moving average are both bearish signals. The neckline is downward sloping and is around 151. A weekly close below this will complete this bearish pattern that has a textbook target at 80.59. Moving over to FX, I will be focusing only on the DXY dollar index in this video. On the 9th of February, I stayed bearish on the DXY, and I noted that the textbook target of this rising wedge is at 105.38. The DXY reached a low over here at 106.15 on the 26th of February, so about 77% of this textbook target is met. I deem this bearish pattern to be a success, but I will not cease coverage just yet, just to see if DXY can still fall further. Now, the latest close over here above the 20-day simple moving average is expected to lead DXY higher still, but for now, I see this upward move as just a correction, and there is a risk of rejection at the Ichimoku cloud resistance around 107.8. Just note that the last close above the 20-day simple moving average over here failed to sustain, so I won't rule out the DXY falling in the next session as well. Moving on to new coverage, I will start the new coverage in this video on Home Depot. I believe it is forming a head and shoulders top, and it may be nearing completion. A daily close below the neckline at 381.72 will complete this bearish pattern that has a textbook target around 323.98. Now note that there are supports at 348.33 as well as 358.14, both of which could bounce Home Depot higher when tested. The next new coverage is on Salesforce, and I might be a bit late in covering this. It fell sharply this week. I believe Salesforce has completed a double top on the 21st of February, and the textbook target of this bearish pattern is 260.31. Note that the latest price action appears to have bounced off twice at the support 293.61. So I suspect Salesforce could enter into the correction phase, during which it is expected to rebound to or slightly above the neckline at 313.8. After this, downside is expected to resume. So I am still bearish on Salesforce. If you already have a position in Pepsico, then things are probably going to be sweeter for you. Pepsico completed a double bottom on the 25th of February, and the textbook target of this bullish pattern is at 169.5. Even though it failed to hold above the Ichimoku cloud, I believe downside is going to be short-lived before an advance back above the cloud, which will improve its upside bias. So bullish on Pepsico. On Blackrock, I think it is at risk of completing a double top, a bearish pattern. If Blackrock closes below the neckline at 943.34, then this bearish pattern will be complete. The textbook target will be at 804.34. There is a support at 904.01 that can bounce Blackrock higher when tested. Now moving on to a couple of names that I will be ceasing coverage in future videos. First is on Dollar Sing. I said that the rising wedge on Dollar Sing has a textbook target at 1.3362. This target was reached on the 20th of February, so the rising wedge is now resolved. Dollar Sing has closed above the 20-day simple moving average, so there is still upside and the risk of rejection is expected to rise, approaching the cloud resistance around 1.3555. The second FX cross that I will be ceasing coverage on is on the Euro Sterling. I noted in the last video on the 17th of February that this cross is forming a head and shoulders bottom. This bullish pattern was invalidated on the 18th of February after Euro Sterling fell below 0.8291, so I will no longer be covering this cross in upcoming videos. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.